1. Start with energy, explain with authority, highlight with emphasis, end with warmth. The ticker is PLUG, Plug Power Inc. We are watching the tape live on this Tuesday, November 25th, 2025. The price is sitting at exactly $1.91. It is currently down roughly 4.8 cents, or about 2.44% on the session. We are seeing a heavy, grinding decline today, with the stock languishing below the psychological $2 barrier. It opened at $1.95, failed to hold the line, and has been fading into the afternoon, testing lows around $1.86 before a mild bounce to where we are now. If you are looking at your screen, you see a sea of red. You see a penny stock that has decimated shareholder value for years. You see a chart that looks like a falling knife. That is the expectation. The narrative on the street, what the headlines and the angry retail investors are screaming, is that Plug Power is finished. The expectation is that the suspension of the activities related to the $1.66 billion DOE loan is the final nail in the coffin. They will tell you that without the government bailout, this cash-burning machine has no fuel left. They look at the Q3 revenue miss, $177 million versus the expected $187 million, and say the demand is drying up. They see a company caught in the crossfire of a political shift in Washington, destined to be a casualty of the new administration's anti-subsidy stance. That is the consensus, a dead stock walking. But the reality is that you are likely looking at the most misunderstood turnaround play in the industrial sector. While the retail crowd panics over the DOE loan headline, they are completely missing the strategic masterstroke that just happened. The reality is that Plug Power just secured $399 million in fresh capital through a convertible note offering. They didn't wait for the government to save them. They went to the private markets and fixed their own balance sheet. They used this cash to retire their most toxic, high-interest debt, effectively removing the immediate bankruptcy risk that the shorts have been banking on. This isn't a company folding its cards. It is a company reloading its chips. The market is pricing PLUG as if it is going out of business next quarter. But the balance sheet now says they are funded through the critical transition of 2026. Let's dissect the price action at $191. Why is it finding support here? This is capitulation territory. When a stock breaks $2, institutional mandates often force selling. We are seeing the weak hands being washed out. But look at the volume. Over 30 million shares traded already today. Who is buying? You don't see this level of liquidity in a terminal equity. We are witnessing a transfer of ownership from frustrated retail traders to distressed value institutional players. These buyers are looking at the assets, the gigafactories, the liquid hydrogen plants, the intellectual property, and realizing that at a $2 billion market cap, the company is trading at a fraction of its replacement value. The floor at $185 is being defended aggressively because the smart money knows the liquidation value is higher than the current quote. We need to talk about the Genco electrolyzer business because this is the growth engine that the revenue miss headline obscured. In Q3, while the overall revenue was soft, the electrolyzer revenue skyrocketed 46% sequentially to $65 million. This is the Tesla stock moment for Plug. They are pivoting from being a low-margin fuel seller to a high-margin technology provider. They just announced a massive deal with Carlton Power in the UK for 55 megawatts of electrolyzers. This is a commercial reality. The UK and Europe are moving full steam ahead on hydrogen, regardless of what happens in Washington, D.C. Plug's global footprint is its hedge. While SoFi Invest traders worry about U.S. tax credits, Plug is shipping units to Europe where the policy support is rock solid. I want to pause here and ask you a question that cuts to the core of this investment. Comment below, do you think Plug Power was right to pivot to private financing and go it alone without the DOE loan? Or was walking away from the government money a fatal mistake? I want to hear if you trust the free market or the government more for this company's survival. Now, let's look at the data center catalyst. This is the angle that almost no one is pricing in. Search results and recent filings hint that Plug is looking to monetize its electricity rights and partner with data centers. We know that the AI revolution, driven by NVIDIA stock and Microsoft, is hitting a power wall. Data centers need massive amounts of clean, reliable power now. Plug has the power infrastructure. By pivoting to supply power to data centers, they can generate hundreds of millions in immediate liquidity. This transforms them from a hydrogen play to a digital infrastructure play. If they announce a formal partnership with a hyperscaler to use their hydrogen fuel cells for backup power or their grid connections for primary power, the stock will not be trading at $1.91. It will re-rate instantly. Let's address the Project Quantum Leap initiative. It sounds like corporate buzzword soup, but the data shows it's working. They are slashing costs. In Q3, the operating cash burn was cut in half compared to the prior quarter. This is the reality that the bears are ignoring. The company is getting leaner. They are consolidating manufacturing, raising prices, and firing unprofitable customers. They are no longer chasing growth at all costs. They are chasing profitable growth. The incoming CEO, Jose Luis Crespo, is an operator. He is there to fix the margins. The market loves an operator. We are seeing the transition from the visionary phase, which burns cash, to the execution phase, which generates cash. If you are using Fidelity investments or looking at Fidelity ETFs in the clean energy space, you know the sector is hated right now. But maximum pessimism is often the precursor to a reversal. Look at the analyst ratings. We have a massive divergence. H.C. Wainwright just reiterated a buy rating with a $7 price target. That is nearly 300% upside from here. On the other hand, TD Cowen cut their target to $4. But pause and think, even the bearish cut to $4 represents a 100% gain from today's price. When the skeptics are saying the stock could double, the risk-reward ratio is incredibly skewed to the upside. The technicals on the chart are screaming oversold. The RSI is deep in the 20s. The stock is trading well below its 200-day, 50-day, and even 20-day moving averages. It is a coiled spring. We are seeing a falling wedge pattern on the daily chart, which is typically a bullish reversal setup. If the stock can reclaim $2 and close there, it would trigger a short squeeze. The short interest in Plug Power is legendary. It is one of the most shorted stocks on the Nasdaq. These shorts are sitting on massive gains. They are getting greedy. If a single piece of good news drops, a data center deal, a new major customer, a favorable policy update, those shorts will rush for the exit. And at $1.91, the cost to cover is low, meaning the squeeze could be violent and rapid. If you are looking for investment help or considering an individual brokerage account trade, you have to frame this correctly. This is not a safe dividend stock. This is a venture capital bet that happens to be publicly traded. You are betting that hydrogen is essential for heavy industry. Trucking, shipping, steel, where batteries simply don't work. The expectation is that batteries win everything. The reality is that physics dictates you need high-density molecules for heavy loads. Plug Power is the only vertically integrated player that provides the fuel, the liquefaction, the transport, and the engine. That moat is expensive to build, but once built, it is incredibly defensible. Let's verify the tape again. We are seeing some interesting block trades crossing at 192. Someone is soaking up the supply. The price is trying to stabilize. It isn't free-falling anymore. This basing action is crucial. It tells us that the market has digested the bad news about the DOE loan and is now looking forward. For those of you using Robinhood stock trading or SoFi Invest, be very careful with margin here. The volatility is extreme. But if you are a cash buyer with a long-term horizon, you are buying assets for pennies on the dollar. The replacement cost of Plug's hydrogen network is billions. The market cap is under $3 billion. You are buying the infrastructure of the future at a discount of the present. The social sentiment is at rock bottom. If you go to the forums, it is pure anger. Investors